Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, making it a few minutes past 1100 UTC. A really big shout out to all of you joining these streams live. We had an average of about 3,600 people for the live shows last week, and a lot more of you watching that on recording, which I'm really, really grateful for. Each and every one of you had some wonderful comments, some great questions, lots of people kind of coming over. Ultimately, that's the whole reason that we do these shows, right? So also have to give a big shout out to everybody that watches this on recording as well. Actually, I know obviously time frames, work commitments, etc. don't always overlay. All right, so I hope you're all well. We got a busy show today, obviously, with the crypto markets really looking in good flow at the moment. We want to just quickly review some of the trading plans from last week, but the most important thing is, and I know the same for you guys, is that we want to look to the week ahead. All right, what are we looking at in terms of the week ahead? What have we got coming up? What are we watching for? And most importantly, what are the key levels? Where are we looking to take these setups? Where can we get on board with these trends? What are we looking at with Bitcoin? Are we going to extend this kind of consolidation period that we're in, giving alts chance to run as we see that rotation of capital into higher risk assets, which are our altcoins, obviously, as well? Horace, hello, mate. Good to see you. When 100K? Well, let's take a look. You know, I'm not sure massively soon, to be honest, but we have a plan in place to say when we would start targeting those kind of levels and when we wouldn't. Stops us being too much of early stage predictors. You know, then there's always that much more of a chance that if you're trying to forecast a little bit too far ahead, for me, then it's very, very easy to get married to that plan, and that can be a very dangerous approach. So what we want to do is kind of, what I want to do anyway, is I want to give myself a set of conditions whereby I say, okay, if these conditions play out, this is my plan of action. This is where I'm looking to execute. These are the type of trades I want to enter. Where's my invalidation? Where am I wrong? And what would I need to see for that to happen? So that's what we're going to look at today. Now, just for the slightly less sexy but very, very much equally important part of the show before we keep on. Gibril Master, hello, mate. Welcome. I want to just take a look very quickly at the news that we have coming up this week. All right, obviously we had powerful news week last week in which we saw, you know, great prints across the board in terms of pushing that towards risk asset. We had some positive news, obviously, in terms of the big beautiful bill and Trump getting that passed through. So at the moment, the catalysts are there for risk to thrive. Trump really wants there to be heavy rate cuts. He's putting an awful amount of pressure onto the Fed. And ultimately, the GDP, the jobs data, although soft, is kind of imbalance, really, which isn't forcing the Fed's hands to cut, especially to the kind of level that Trump's wants, you know, talking about this 300 basis point cut, which is ridiculous because I think in history, the most there's ever been is 100 basis points, and that's, you know, COVID, for example. So just quickly, as we look here at the news, obviously we're on the 21st of July. Today, our focus is on the US market, biggest markets in the world, and has probably the biggest knock-on effect for other markets, other countries, as well as it having the world's reserve currency. All right, Craigie boy, hello, mate. Hope you managed to sneak it in between work. And yeah, very well here. Thank you, mate. Thank you for your well wishes. So as we look at if we look at the screen here, we can see that 1:30 p.m. tomorrow, we've got Fed Chair Powell speaking. It's a lot earlier than normal, all right? So keep aligned with that because that's the start of the pre-market for US equity. So, you know, you've got things like the NASDAQ, the indexes are running then, but that's the pre-market. It's an hour before the actual US Open, so that could have effects. However, we need to obviously qualify and quantify this we would need something quite extreme from Powell, I think. You know, he would need to say that they have fear that inflation's rising, that their early stage data sets, they were concerned about that they may be thinking about bringing back the number of cuts, which seems incredibly unlikely. For example, I think 2 further cuts this year now in interest rates are priced in incredibly highly, I think over 95%. And there are actually talks now of the market, the odds favoring or getting better for there being a 3rd cut, right? So we need to kind of factor that in. If he says anything particularly dovish, akin to being bullish, saying, actually, you know what? The data's a lot better than we thought. We're actually going to, you know, consider upping the amount of cuts, then we could really see risk markets take off. And when I'm talking about risk markets, my focus is mainly on the indexes, the S&P 500, the NASDAQ. And then typically we see that kind of correlation come through into Bitcoin as well. It's not always there. Bitcoin's starting to kind of separate itself out as a little bit of a hedge, the digital gold kind of narrative as well, but still really kind of acting and trading like a risk asset. So as we've got that, then we've got Richmond Manufacturing Index as well. Again, these are important because it just shows you kind of area by area how these places are getting on. That plugs into early stage warnings for economic slowdowns. Wednesday, we've got existing home sales. Now, this is what comes into focus this week is the housing market. All right. Now, this is normally a really good indicator. A lot of traders will be watching this. So this is where we're really starting to see this start to ramp up. Previously, last week, we had everything about retail, PPI, CPI, etc., jobs, which have really been in focus, and unemployment. Now we're moving across to see the narrative for home sales as well, all right, in terms of are people able to get access to financing for mortgages and stuff like that, right? So we can see here forecast 4.01 million down from 4.03 million last month. So as we look at this down here, then we run through onto Thursday, we can see a really large news week on Thursday across the board, but here we're looking at the US. Obviously, we've got flash manufacturing PMI and flash services PMI at a later, well, at a different time, 2:45 p.m. my time. That's 3:45 p.m. UTC. And then we finish up the week on core durable goods orders and durable goods orders. So I'm not really seeing much that's really going to kind of jump out here. We would need to see the early stage data we know in these areas be really considerably missed or to have some kind of shock to the system, which is quite hard to see at this point. However, the caveat for that is that we are in a very fundamentally and news-driven market. So we just want to be careful. We want to be aware when those events are happening. If you're like me, if you're an intraday trader as well, then they're very, very important. You see these large injections of volatility into the market as well as volume. And that's why we kind of focus on trading around those areas. Anyway, that's done. Managed to get all of that and the intro in under 10 minutes now, maximizing our time. We're going to look to get the show wrapped up probably in about 35 minutes from now. So we're nice and compact with the data. Obviously, we've got our alt request and chart request Wednesday coming up in a couple of days as well, where we can take a look at any of those assets or instruments that you would like, from crypto to FX to stocks, etc. But for now, what I really like to do on a Monday is I'm setting out my trading plan for the week ahead. What do I want to see? Now, what we can see here, if we just focus on the daily, is this consolidation right now. If we move to the weekly here quickly, right, we'll move this up. Why have these been our key levels? Well, the weekly really kind of frames our higher time frame. I very rarely go a lot higher than that unless I'm looking at position trading or stocks, in which case you look at monthly, quarterly, etc. Or if I'm looking to find key levels and areas for price to interact with, in which case I'll use higher time frame candles as well. So as we look at this here, this for me is still such a key level. Now this is at 109,998.9 here on OKX, but this was the all-time high that was set at the beginning of this year in January. We can see what an excellent job it had done at capping the upside of this market. Price runs in, wicks below, price runs up again, sells off, wicks below, sells off, until price gets up to this level. And one thing I would say is just look at this here. As price starts kind of building up from these levels, look where we're reacting. We have this weekly gap here, this inefficiency. We had these, which were actually equal lows, all right, on a lower time frame as well. And then we're just looking and saying, okay, well, how's price reacting at where we've clearly got demand? And how is price reacting at where we've clearly got supply, right? And what happens is price ping-pongs around like a range, and you can see that very clearly on the hourly. What we're then looking for is a strong breakout above this level here, and you can add volume into that as well. Look for those strong volume-based breakouts. And then we want to see this kind of area retested. Now, the caveat here is that, especially with cryptocurrency, and it affects other risk assets as well, especially in technology, some of these moves can be so aggressive, we don't always get these areas retested. Case in point here, right? So when we had this breakout here, this actually came in with really nice volume at this level. Now, the ideal play here would be the price breaks out with volume, leaves this gap, which we can see on the chart here, and then we revisit this, allow more buyers to step in, or we retest this order block here, or this area of demand, which is a high probability area, because the way that I look at this is we've swept liquidity out from these lows. Price failed to get back down below there. We saw absorption here, meaning that those aggressive sellers here were getting absorbed by buyers. We had the breakout, but once again, we didn't kind of retest these areas. We don't have to. Trading doesn't just work like an aim point system, right, where you're A to B to C to D. In this case, we've kind of gone straight through to kind of F, and then we've corrected down to here. But we need the plan, right? And the plan at this stage was strong breakout. If we get a retest of this gap, this is where we're looking for longs. If we find continuation, we then look on the lower time frames for points of consolidation to show that we're trending. Yeah, same as this, breakout, consolidation, breakout of consolidation, we move up. Reminds me actually, as we look at the higher time frames here, of several bull runs ago, and even the last bull run really in crypto, where we were just seeing these large expansions, bull flag, long the bull flag, long the bull flag, and you basically traded that to exhaustion. Dynamics are slightly different at the moment. We've got much more of a mass adoption of cryptocurrency, well, certainly Bitcoin, and now moving into Ethereum as well, some select others, but we're also in a highly saturated market. So how does that play in with the plan? Well, the hope in terms of looking for altcoins to start running was the price would get above this level really convincingly and then just hold here. Just want to see price chill out. Typically, the methodology for doing well in altcoins has been historically to wait for Bitcoin to really have those explosive impulse moves and then to see it start to consolidate. People then up here start to think, okay, we've accepted that Bitcoin is probably fair value above this price anywhere in this kind of region. Yeah, we just want to see that consolidation, similar to how we had this, then price came down, consolidated here, and then we had the breakout. Within this consolidation, however, we then want to see the capital rotation into altcoins. All right, we're going to take a look at Ethereum in a minute. I can see Gibral Master here. Tried trading ETH over the weekend, but it's not the same as trading BTC. Supports don't hold random dips. Got a bit chopped up. Yeah, and you know what? I want to look at that with you guys as well. I don't really actively trade cryptocurrency over the weekends. I like there to be the volume and the interest that having traditional markets open as well, legacy markets, right? But yeah, absolutely. So we're going to look at that, and we need to remember when you're dealing with anything that's a lower cap, and obviously Ethereum is to Bitcoin, Bitcoin is to the S&P 500, etc. But it needs to be relative, and what we tend to see is that the lower the market value of these or the lower liquidity situations, you get much more random noise. You get lots of what people will look at as stop hunts or liquidity drains. So we're going to do a really deep dive into ETH in a minute, because I think it's such an important blueprint for what could be coming up with certain alts. So weekly, what are we looking at here? Well, quite simply, we've had this now. We confirmed this gap, which was part of the Bitcoin report that I released last night for members of the Bird Nest. If you've got any interested in looking into that, we've got tons of free resources. We've got everything from paid memberships, mentorships, etc. If that's of interest to you, you can find the link down in the description to everything that we do. But we do a lot of stuff for free. There's tons of great resources on the website. I'll run you through that in a minute, as well as all of our trading team statistics, which are kept on there live. But if you're somebody that's coming at this, there's huge resource libraries in there that you can use as well. So while we hold above here, this is exactly what we're looking for. We're looking for that consolidation, or for price here on Bitcoin to just chill out, hold these key levels, and that's where we go from there. So we're now going to drop onto the daily, which is where we're going to add more context. We can see what the plan was. And we've been looking at this all the way through July here. Like we said, right, look, expansions, being very cautious at these areas, expecting these pullbacks, unless we saw really strong move through. And this was unfortunate, because this was the initial sign, looking at the CBD here as well, but this was the original sign that this is where buyers were stepping in, right? Look at what's happened. You've had this long stage consolidation here. Price breaks out, comes back down to the area, hold this area, move further, consolidation, smaller breakout. But then we hold this consolidation, which is so important, this area of demand. This is where the buyers are, and the gaps allow these areas for where buyers can get back involved. So the plan was really simple. And this is what I mean by conditions. When we were here, the plan was, as long as we hold this gap, this area of demand, we continue to look higher, right? However, as we saw previously, when we were in this area here, we're just chopping around in a range. So shorts from the highs, longs from the lows, right? We call these moves here. We call this pullback here. But as we said, when you start to see price really showing strength into these areas, like look at the rejection here. Look at the rejection here. Strong move down, immediate retest. Look at the upside wicks. Remember the terrible analogy of the hot water. You've got two pans, one's got boiling water, one's got tepid water. You know, if you want to see a rejection at a level, you've put your hand in the hot water. You want to see that quick move away. Here, quick move away. Here, you had a little move away, and price kind of held there. So you're kind of dangling your fingers in the water. You're like, actually, it's not too bad. It's quite warm. I can push my hand deeper into the bowl. And then you can kind of force your way through these levels. Same here at the lows, right? Took out those equal lows, fast reaction up, fast reaction up. Now, what does that mean for here? Well, quite simply, we're going to look at this on the 4 hours as well. There's a key area of demand down here, but price is just consolidating, right? It's basically making like a bull flag. Yeah. So however you draw your, whether you're using line of best fit, resistance, etc., you basically got this forming here, right? So whether that's either a falling wedge or a bull flag, and you're just looking for breakouts of this area, again, on the lower time frames, look at how the wicks are kind of coming back up. Ultimately, price is compressing. And when price is compressing, it's, basically think of it like a coil, it's like a spring, that's coiling. You're storing all that energy inside here. And then when it pops, you've got a higher likelihood in a bullish environment of these things breaking to the upside. I think early 70% on that. If you want to know more about pattern trading, I would revert to experts such as Axel Kayaba, CMT, who's probably the best and has the best data sets in, certainly anyone I've met. And I'm talking about funds and traditional traders as well. So on a daily scale, at the moment, we're chilling here. Do I think the move is to buy Bitcoin here? I personally don't. I think this can have more upside here. What I really want to see from Bitcoin is it to continue to hold and chill out here, and for us to allow ourselves to be looking at key levels on some altcoins that can really start to pop off, right? I think it's still very, very heavily narrative driven. I think you need to look and respect the fact that there's still a flight to quality at the moment. It isn't like previous bull markets where you could basically put a list of all the coins. We used to know them all, right? You used to know the people, you used to know they were coming out, know the teams, know the players involved. Now there's 10,000 times the amount that was then. You used to be able to put basically, a list on the board, eliminate 50%. You could basically throw a dart at any of those other projects. And as long as you got the conditions right and the understanding of the dynamics, then you stood to make a lot of money. Now that's not the case. We're seeing much more careful capital rotation. We're seeing an overly saturated market, but there will still be huge opportunities. And technical analysis, combined with the fundamental understanding of those, can help us position ourselves well. Obviously, I always recommend people get a good general understanding of macroeconomics as well and economics. And if you're not in a position where you can do that, just find some really, really good people find really good communities. Obviously, I would recommend the Bird Nest. Is where I'm fortunate enough to lead a wonderful trading team, and I know what we produce over there, but there's other groups out there as well. Or if not, follow some amazing people like London Crypto Club, right? People like Macro Alf. Just there's some amazing macro people out there, right? And yeah, God, you know what? Capital Flows as well is another guy. He's just absolutely next level. Surround yourself with good people. You can trust what they say. Don't let it kind of water down your thinking too much. But if you don't have that understanding yourself, find someone that can provide that base, and it will really, really, really help. So anyway, back to Bitcoin. We're going to move this down onto the 4 hour now. Ultimately, we can see the indecision on the chart here. Long wicks to the downside, long wicks to the upside, wicks to the downside, wicks to the upside. Price basically in this kind of falling wedge pattern at the moment, where that's trading like a range. And as we look at this on this time frame, and obviously if we move it to lower time frames, we can see what happens. Deviation, price steps back inside, pumps to the high, rejects the highs, reacts at the lows, lows back to the highs, deviation back inside, back to the lows, back to the highs, back to the lows. Now, is this different? Yeah. So how can we tell if this breakout's going to be different? Well, first of all, you normally want to allow for these things on their given time frame. So that's obviously on a higher time frame. If I want to redraw this now, and I always like to try and anchor at the wicks, all the bodies. I want to see those areas respected. All right. If I'm looking at this here, then my line down here, if I'm looking to try and get as many wicks in as possible, would be this. You can do that in a smaller line there, right? So what does this mean? Well, if this area was resistance up here, this could cause a sell-off here, and this does here. If price is indeed breaking out of this higher time frame level, I want to see it respect its current time frame level as well. Meaning that if we start to hold this area here, and then if we encompass the wicks here, or in fact, actually, let me do it like this. If we can actually identify the area of absorption, which was this, right, then what do I want to see? Well, quite simply, I want to see this, right? Because if we'd applied those same principles here, Yeah, that would have stopped you going long, because did that happen? Absolutely not. In fact, we saw the opposite. We just saw absorption coming into this area, price getting back down beneath. Even this one here, yes, you have that initial kind of breakout here, but does price show you that impulse? Does it show you that you can check this with volume as well? Does this pop up here? In fact, this is the lower one here that you're going to be interested in, right? So, as it comes up to here, look, lower volume. That candle was much bigger volume here, and that got utterly absorbed. If we look at the CVD as well, we can see the same thing, right? We can see the buyers really struggle to kind of hold this, showing weakness. As we then move on to these candles here, the absorption continues. Again, CVD, lower print here as well. And then ultimately, this is then a red print. CVD agrees with us. And that's a large candle on the chart to match a very small bearish candle here on the CVD. What does that tell us? It tells us that it didn't take a lot of effort from sellers to make this happen. Yeah. What we want to see at the lows is the opposite. Yeah. You want to see like big red candles, for example, that are getting absorbed by buyers, or, it taking a lot of effort from sellers to push price down into here to not really achieve much. Okay. But if you're focused mainly on volume here, this is obviously cumulative volume delta, the CVD, but just on volume here, look, you can see how it started to taper away as we got into this high. So even if you're not using volume for that, and I would recommend it, but I would also always recommend studying it, right? Then rejection at this level, we wait for price to get back above it. Ultimately, this could just be retesting this area now. If we step back inside the wedge here, then I would be targeting the lows of the wedge here and these lows. But as long as we continue to hold this area of demand, then, I'm not really considering shorting Bitcoin. And then we've got a huge daily and weekly gap below us. So I'd really need to see quite aggressive breakdowns here from Bitcoin. And my focus is ultimately on these higher time frames, right? So this is what I'm looking at. So with Bitcoin chilling out, consolidating, if you're looking to trade Bitcoin, and again, none of this is financial advice. For me, I like buying at these kind of key areas. If I was thinking, and like I said to you, I'm not actively buying Bitcoin at these levels, right? The time for buying Bitcoin for me, which was very, very clear, was down here. You can see it from all of the different live shows when we broke out here as well. And really, really kind of early stage when we kind of came out of this consolidation, which was due to a few other technical factors as well. However, I'm personally not buying Bitcoin here. I'm not adding it to my holdings. But if just as an asset, if I was looking to do it, what would I want to see? Like I said, you just want to see continuation. You want to see the strong breakouts here. If we're looking at volume again, we can see it not really mustering too much here, right? Where look at this. When we broke out from this level, look at the rising buy volume here. Yeah, we saw that. It came off of a red candle here. That came down. We had buying volume growing all the way through here. This one, which was price trying to get forced down, ultimately got absorbed, and it allowed the buyers to step in. So with this cooling off, what is my attention on? Well, my attention now very much turns to Ethereum. Okay, so let's take a look at ETH. Here we go. Hang on, let me clear this up because we've still got some trades on here. This is going to be an interesting one, isn't it? Let me just get rid of the trade examples quickly. And we'll keep those bits on there for now. Okay, so where are we with Ethereum? Well, I mean, it just happened to time in exceptionally well with a tweet that I released, actually. I think it was, let me have a look. Here we go. This was just the most simplistic view of it, but just such an important one, in my opinion. Key support level here, pivot, yeah, or SR level here, and another one here that I'm interested in, right? This one for me was so very clean. As we look at the chart here, let's be honest, right? Resistance, level flipped, support, 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 level lost, resistance, 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 level retested. Then we get this weak retest here. Price closes below. Look what happens, turns back to resistance here. So resistance through these areas, resistance all the way through here, and then fired up. And then look when we got the breakout here. And what I like about this now, actually, we're not on the other index chart, is we can see that here. Big rising volume bar, big volume bar on the CVD as well. That is happy days, all right? Above this level, looking for it to expand to here. Now, obviously, you don't always get it as clean as this, but this was just an absolute no-brainer. And again, look at where the absorption was happening before. Look at all these wicks, right? Look at how well those wicks did, yeah? just sellers stepping in, just trying to force the price down, but they just couldn't do it. And then the whole premise of this move here was that we were holding this beautiful bullish gap below us, looking for buyers to step in here, and we absolutely got it. So we're now in a similar situation here. We've broken above this level. Again, look, this one didn't give us a retest here either. We got this very, very like small pullback here, all right? So then we get to see that as it goes up. The Micro Psycho, hello mate. And Nick, I didn't see you sneak in there, buddy. How you doing? 2103 called it to a T. Nice work, Micro. Very nice work. So this is another area. Again, this is a little bit messier, but I can see clear support here. Resistance, close above, retest of this area. Sorry, zoom in for you. Here as well. We lost this. This all got a little bit messy, but I'm still interested in this. We're going to look at it on the daily. We've now closed above this here. So realistically, where's the next target for ETH? Well, if we're looking at this on a daily scale, right, then it's this, isn't it? It's the all-time high. I mean, you could look back here and kind of say to yourself, fucking all-time high, sorry. We want to draw that in over here. The local high and then the all-time high, right? So as we look at this here, where's the absorption coming in? Look at the upside wicks, right? So if we take this as an area here and we say, okay, I would say that's a pretty good kind of area there, right? It's only rough. We're just looking for what happens when price moves into these areas, yeah? Baloo 2, what value does a coin like Alien Base bring after the coin? But I don't know, mate. I'm afraid I would have to refer you to our fundamental analysts on that one. I'm afraid, mate. That's really not my area of expertise, so I wouldn't want to speak out of turn. So we've got the local high, which is here at, let's see this here, 4109.56, that kind of area. I want to see what price does in here. Again, look, rejection previously, and look, swift, aggressive moves away. We want to see price move through this week, ideally. Doesn't have to, can spend a couple of weeks doing it. But from a weekly scale, that's a really nice move. Just nice close up, exactly like we had down here, right? See how price took out all this absorption? See how it took the support level here, the resistance level, came back up. We just get that nice close. High volume, big body candle, what I would call a strong close above the level. Seeing buyers step in here. And then what you want to see is price come back, buyers being able to buy at a little bit of a discount here, and then you want to see them step back in again. We want to see this exact thing replicated here to push up. Apart from that, I think there's still some more upside here from ETH, but certainly something that I want to show just a little bit of caution towards, considering the aforementioned factors, right? Now, if we look at it on the daily, this is where this area becomes a little bit more clear for me, right? Now, they're not the biggest reactions in the world, but there's clear support in here. The area is then lost, right? Price comes back, aggressive sell-off. Price can't reclaim this area again, aggressive sell-off, right? Then look how price comes up, an initial move away, but then it moves back. Now, remember the hot water test, right? So this water here is boiling hot. Then all of a sudden, you put your hand back in, but actually it's been sat there for a while. It's lost some of its heat. Oh, okay, so you can meander your hand in a little bit more. And that's when you start to see these breakouts, when these areas aren't forming aggressive reactions, right? Look, good buying here, nice increase, solid rejection, buying, price just ranging between these two levels. People not quite happy to accept it above this level as fair value, but people also very happy to accept it as fair value down here. Until this is lost, then there's an effort here to be driven up by the buyers. That then breaks down aggressively, right? And then look, we get pinned underneath it again here. So now it makes sense to me that we would see initial stage rejections here. And that's why, once again, we're looking to this area as well, right? Sometimes it really helps to just squish the chart up like this and really kind of look out for those aggressive V-shape, rejections like these, right? So if we zoom back in, we can see that we've got a clear area ahead of us here. Like I said, I'm not expecting it to just hit the lower side of this box and then just reject. I know that we've seen rejections through this whole area, but I am still looking for price to always take some form of liquidity. And this here has been a very good level. And I'll tell you for why. Now, whenever I look at a key high or low like this, and let me just add a few of these on the charts to see if we can, add these in as well, just as an example. Delete these off the chart afterwards, but we can do this one as well here even. So this high here, we're going to focus on this, right? So what happens? So this one, price comes up and we've just closed above it, right? A large expansion candle, tons of good buying volume, CVDs in the green, happy days. What do? Close above this line. That was that blue line I drew. What happens? Close above, retest it, absorption, price moves up. Close above, retest it, absorption, price now moving up. So this is where we want to look at these levels. This was the lower one of the highs, right? Look, rejection here. Look how price engages with it again. You really want to kind of remove a lot of the noise and think about this very simply, right? If you're coming into this level and buyers are present, active, and aggressive, aggression makes a big difference, right? Especially when you start looking at volume. Then price moving through here, the buyers should be able to propel it above. Ultimately, this was a good take profit area. The market was unsure whether it was fair value at that price. It then sells off back down to the level, and this is why support and resistance works, or supply and demand, where there was previously demand or where there's new demand, right? And buyers were clearly happy to step in at this level. So now we just need to see the same. We're fully expecting ETH to kind of make a move up to here. If it closes back below this level, which is 3746.33, then I'm looking for this area here to be retested. What we can see is we had a strong breakout here. We didn't get a retest. No, we absolutely didn't. What did we do? We held this bullish gap that we set on the breakout of that level, right? So on the close of this daily candle, maybe we leave this gap here. So ultimately, what we would then look, if we do get a move below this level, is for price to reclaim this pretty quickly, showing us that buyers are indeed present within that gap, or that this level holds. I wouldn't rule out a move down to this level here, but again, you ideally want to see those quick reactions, or price start kind of consolidating here, and this is then forming that bull flag or that consolidation we look for the leg up. There's been a lot of very aggressive buying taking place here, right? Which ultimately, catching moves like this, explosive breakouts, then, you know, often once you get them under confirmation, it can be a really good idea to use like your moving averages. All right. Now you can see here, I have a very simple moving average system that I use on a daily, weekly chart. I use it a lot more to trade stocks and to manage my investments that aren't cryptocurrency, but also crypto. Is this. We get the golden cross here. That's the 20 period is the green, the 50 period is the red, and the 100 period is the purple. I'll also use a 200 period as well. We get the cross here, get the gap created. So yes, this is a lagging indicator here, but look how they're kind of all pointing up like that. That's what you want to see. When price is in a strong trend, downtrend or uptrend, look what happens. They all cross. So in this case, you want to see them out of order, 20, 50, 100. And then look, this is where they start. This is crossed here, and this is all fanned out. Look how much downside that got you here. They're all crossed back in. Close of this candle got you all of this upside until you start closing back down below the 20. Same here, right? So we're now in this situation where we've kind of got this really super strong trend. I mean, look how it's really starting to gun away from this. So again, we can utilize the 20 period moving average here as our kind of line in the sand if price comes back and then starts to kind of break down below it. It's not, my friend. So Gibril Master, I don't have any affiliation with these people, by the way. I use this for my volume, which is volume suite by somebody called Leviathan. It's like a little bit of a hybrid suite, and then I turn on the large threshold candles above 3.5, meaning that I get a really bright candle on the chart if it's over 3.5 times the threshold of the average candle. And that's just what I use there for volume. Very smart suite. I've always found it really, really helpful. And this is just the standard CVD. Yeah, cumulative volume delta, you can just find it on the CVD. But I would definitely recommend really reading into how you interpret these using the rules of absorption, looking on the lower time frame for divergences and stuff like that, for example. But yeah, CVD, standard there to change the colors. And then this one is the volume suite by somebody called Leviathan, who, if they ever have stumbled across one of my shows, I'm very grateful to this person. They've got a few really good volume indicators out there. So let's kind of take a look on the lower time frames here, right? And we need to make a plan, right? So let's take a look at this. We've got about 10 minutes left. We're going to do that. And hey, from Yorkshire, Matthew, I was up there a little while ago. Love getting up to Yorkshire. One of my favorite places literally in the world. Some of the most beautiful landscapes, food, people, communities. Just a wonderful place. And obviously the very best tea, which I'm going to take a sip of right now. It would be my pleasure to take a look at Link for you, mate. Let me just get through this and then we'll finish up on Link. The micro psycho Bitcoin retested previous all-time high around 120k, then pumped to 126, 127 rejection. Mega volatile dipped to 80k by September, 95k, then double bounce to 115 through August. All season, second phase of macro correction, 180k by year end. Good lord, man, or lady, I hope so. I think you would be, you're kind of in this situation of just, going euphoria, max pain, and you're just clearing out a lot of people from the market. And has that kind of cycle. I think we're also going to be a little bit dictated to by who takes over at the, as the Fed chair. If we get a very Trump-friendly candidate in there, if he gets a yes man, then obviously, we can expect incredible, volatile and upside for risk assets until the whole thing explodes. Very welcome, Jibril Master. Thank you. Shy as well. Hello, mate. See you working there. And Erica, our lovely Erica, how are you doing? Right, so finishing up here on ETH, 4 hour, right? Look how beautiful these levels are getting respected here. Yeah. Remember, we just drew these on just targeting these key highs and lows and points of rejection. And what we're just looking for here is absorption or acceptance. Yeah, it's probably a better way to think about it. Consolidation, pump, longer consolidation. Don't worry, just know the key areas. We can see we have this beautiful gap here. Yeah. And as we're looking through here, moving it across, it's holding this level. Look at the absorption from the wicks coming from the downside. And we see these breakouts. We're now looking at a similar situation here as well. We can look at this. We can see that we're, again, holding these gaps on the way up. This is why I like just kind of sticking to the same formula. Are we respecting the gaps? Are we respecting the levels? Are we respecting the supply and demand? Yes, we are. We can see that here with these order blocks. What do? Once we close above the down close candles, yeah, close above it, this becomes an area of demand, yeah, or an order block. We do the same here, close above, continuation. I then look, when we get these ones here, if we've got a larger, so collection of these 3 bearish candles here, or down close candles as I would call them, they engulf, these ones here. So I'm more interested in what happens with the larger set here, and drawing that across, we can see we got the same thing, closed above it here, retest. What you can do here, and this is where volume CVD comes in really handy as well, is you're just looking for these, right? Volume on the breakouts. Look at the rising volume in that one. That was beautiful. And then agreement here from the CVD. As we are at the moment, we're not breaking out as such. We're kind of just retesting this. We're holding this level. What I would do is probably add this in here and say, okay, well, on the 4 hour, what can we lay ourselves down as a set of conditions? Well, as long as we hold this area of demand, right, and we're holding this already, then we look for this to give us opportunities to trade this higher. I'm not going to be looking to actively long within this area, although I do think that we'll be targeting 4,109. I will be looking for price to have an initial rejection here, find that consolidation, and ultimately move up from there. So let's very quickly just take a look at our baskets over here, right? So obviously we can see crypto, up overall, the risk bid is very much alive and well at the moment. What can we see as we go up here? Bitcoin dominance continuing to come down. That's now around the 60 region. That's what we love to see. Look at these, yeah. The breakdown from this level here, this is the first key area we're targeting here, 57.71%. Price really starts getting into these areas, and historically, we have seen some really big things for alts. So that's what we're waiting for here, and this really is just an aggressive drop down as ETH starts to take dominance over Bitcoin, and as well as obviously other crypto. In terms of these, as we're moving through here, I'm looking at the indexes as well. We've got the NASDAQ up on the day and also super bullish overall, right? We've got the S&P 500 incredibly bullish here as well. That's just continuing to melt faces. And then we've got the Dow Jones here also, all right? Longer term plays on these. When we're looking down here, gold is a little bit of an animal of its own at the moment, all right? So that's something we're kind of looking at, but you can see this just in this large consolidation moving sideways, expecting more upside from gold as we move along, and especially as things start to cool down either latter part of this year or in 2026. The dollar index, the dollar is just getting pumped, is just getting, had this little pump, now it's getting dumped again right at the midline of our range here, which we've had in play for like the last 7 or 8 years, I think. This here is just, holding price down, ultimately probably more downside on the horizon for the dollar, which isn't the worst thing. Historically, the dollar being weak has been good for risk assets and been good for Bitcoin, right? Now, volatility index, which is something I pay very close attention to, under 20 is normally really good conditions for risk assets. So again, plays into the NASDAQ, plays typically into crypto. Bitcoin, we need to understand the cycles and the rotations, but ultimately that's what it means. Any large spikes up are typically to be very cautious of. And, when price really moving up like this, then, ultimately you don't want to fade the downside with something like that. When you look at risk assets, you can take this, you can put something like Bitcoin across here. What's happening here? VIX is moving down. What's Bitcoin doing? Moving up. What's happening here? VIX is moving up. This is moving down. This is people opening or taking puts on the S&P 500. So think about it as people taking short-based options on the S&P 500. So they're, either hedging or thinking that risk is on the turn, right? So yeah, look at this. Absolutely beautiful at the moment. So we want to see this continue. We want to see the VIX just holding down here. Ultimately, all of these things are painting a really good picture here. We don't have the greatest start here from the Aussie and New Zealand dollar versus the Japanese yen, which are kind of risk-on currency pairs. You're taking a higher yielding currency pair like Aussie or New Zealand dollar against a low yielding or safe haven currency like the Japanese yen. Just gives us a little extra ticker. And then when we get the market open from here in a little while, we're going to see what the Magnificent Seven stocks are doing. That's Apple, Microsoft, Amazon, Google, Meta, Nvidia, and Tesla. These are a huge part of the S&P 500 and the NASDAQ. So when they're doing well, typically that means good things for risk assets. So what do we really take away from this before we finish up on Link is that we're just looking here at, this environment being laid out in front of us that's really, really good for risk assets. Now, we know there's a lot of turbulence in the market still. We have some unfortunate geopolitical situations. Obviously, we have Trump, who can just change the market at any moment he wants. And we still have the Fed that can intervene as well. So really, really important at the moment that we're watching those key factors and obviously looking to see how these, tariffs and bits and pieces are washing through. So let's take a look. Let's take a look at Link, shall we? A good old friend Link. So let's do this. Well, no, actually, I think we probably have a fair bit of TA on here, right? As we can see, kind of our long-standing chart. For anybody that doesn't know, these are, we've been doing this for a long, long time now, right? But these are, we don't adjust these charts until we delete it. I don't know why I haven't deleted that till now, but, yes, as our Polish friends say. Key area of demand through here. Why? Well, if we just pop out to a weekly for a minute. Again, just looking at what's keeping price down and then what led to these really big pumps. So we got this deviation. The price broke above this level here and we retested. So the red line's really key. We also kind of held this green box. This is just looking at it as a larger kind of area that can provide good buying opportunities or good selling opportunities should we lose it. So this through here, for example, we see price really compressing and sticking to this when we got that breakout. It was just absolutely epic. Retest the area, good buys, retest the area, good buys, good buys, good buys again, all right? So therefore, we want that on the chart. Not really sure what that's doing there. But I think it's probably from TA previously where we were looking for buys at this area. People asking me where I'm adding Link to my portfolio, etc. Well, down here, and also very happy to take swing trades on at these levels as well. So where does this leave us? It's just super bullish, isn't it? Look at it. It's just big, beautiful, bullish breakout candles. We come into this level here and we just absolutely torn through it. Remember what we were discussing before? If we see one of these levels, let's look at how we react at it. And the fact that it's just absolutely tore through it immediately then has me looking left and saying, okay, well, where can price realistically be heading for now? On a weekly scale, this high will be a key liquidity target at 27.195. But I am also aware, slightly less so, again, just want to monitor what happens when we get there, when and if. Obviously, nothing's a given. But to this weekly gap here, all right? Let's see what happens when we get to that level. Moving this onto a daily now, again, you can see just price really, really, really strong. One of those rips where it becomes very, very difficult to get back involved. And I know it sounds like a broken record, but as I said to you guys before, it's just about targeting these key areas here. If you're wrong here and you get stopped out, you're wrong and you get stopped out. You would have made money on this. You would have made money on this as well. You have to be willing to lose in this game. It's not a zero-sum game. Micro Psycho, I'm waiting on Link breaking a 5-year pennant in October. Awesome. Will be epic. $200 Link. That's the dream, my friend. That really is the dream. So in terms of what we might want to be doing in terms of looking for levels to get involved, if we come back to this area here, happy days, 17.969. Also, this kind of small consolidation candle here. If we look across to the left, price is also in a really interesting spot here because this consolidation here is giving us a really good area of mitigation. And what does that mean? Well, or what I use in terminology anyway. Price came down. Yeah, big wick, big recovery here, consolidation. This was lost, retested, price sold off aggressively. So when we come back to this area here, we expect rejection. You can see, arguably, you could say it was kind of down to the wicks here as well. So it was it was responsible for this. I'm a little bit more interested in the bodies when we come to these areas, and for me, it was these highs through here that led to this reaction. However you look at this, look at these prior consolidations. How does price react when you're there? Let's take this example, right? This was a large buying opportunity within here. Yeah, this consolidation led to this big pump. When price found it back here, look at that really nice buy off of that. Then it closed below, retested it, and away we go. So again, now we've created this area here. Let's see if we get that retest of here and then really push up. All right, that's very much what I'm looking at on link there. And then let me just finish up very quickly on the 4 hour. Again, we just follow our same principles here. We're breaking out and we're trending. Again, you can throw a moving average onto these if you like to, right? You can see this beautiful trend. Don't fade it. Sometimes these moving averages just give you a really nice visual representation of what a strong trend we're in. Caution when you close below it, back above it. Look for that to happen, right? Look for these consolidations to be closed above, consolidations closed above, consolidation wasn't closed above, right? So you just don't get involved. Consolidation here, which was closed above right here. And yes, I count this one because the rules I told you earlier, look, this candle here extended beyond the low of this candle. All right, so this is a new area of demand. We closed above that here, retested it perfectly and moved higher. So if I want a more aggressive entry point here, it's this, our 4 hour order block, all right, or area of demand. So price drawing back to here. If we get low time frame triggers there, happy days. We'll use that to step in and move a little bit higher. All right, and then hopefully like the micro, so like I said, $200 link, let's go, right? So thank you very much for joining me all today, guys. Really do appreciate each and every one of you. Loads of you live again. I think almost 3,000 of you as we speak. Have a really good week ahead. If you want to know anything more about what we do at the Bird Nest, you can find a link down in the description. Please don't forget to go and visit the website as well. You can see everything on there from our trading calls. I will run through it all with you on Wednesday as well. But do go and take a look. You've got free resources, infographic, tons of things that will help you navigate this market, all right? And apart from that, have a fantastic week ahead. I look forward to seeing a lot of you over at the Nest for the rest of the day and for our live trading session tomorrow. And then I'll be back with you live on Wednesday for our alt request show when we will run through the charts. Cheers, Craigie boy, and everybody else. Have a fantastic week ahead. I'll see you all